Good morning and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be having a very good session looking at an overview of the top things to watch in the markets this week. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. I'm hoping that you had a pretty good weekend, and now we begin a new week. Hopefully, you'll be able to capture some good trades in the markets. So as always, I would like to begin with a disclaimer that this session is not investment advice. It's not a recommendation to trade. So you should always do your own research, your own due diligence, and practice proper risk management. So good morning, Francis. I can see you in the house. Morning, Thomas. Morning, Annette, Max, William, as well as Kigenyi. Thank you guys for joining. So let's get straight to the economic calendar and try to understand what are the key prevailing events. So today, being Monday, we're expecting quite a slow day. This is the summer bank holiday currently happening in the UK today. And this basically implies that the banks are closed and we'll be expecting little to no volatility from the UK pound pairs. So as usual, being on a Monday, we expect low volatility in the markets and volatility to pick up as the week progresses. So at 11 a.m., just a few minutes ago, we had the German IFO Business Climate Survey, which showed an improvement compared to the expectations of 86.0. We had an 86.6 number, which is good, but also a drop from the previous reading of 87.0. So this shows that optimism in German business climate is slowing down. So later on at 3:30 p.m., we'll be getting data from the US, and this is basically core durable goods orders as well as durable goods orders. So for core durable goods orders, here we are looking at the total value of new purchase orders placed with manufacturers for durable goods, excluding transportation items. And in this case, we're expecting a month-over-month drop from a previous increase of 0.4% to a 0.0% change over month-over-month. So we'll be looking at that, and of course the durable goods orders. So in the previous reading, there was a big drop of negative 6.7%, but this time we expect a turnaround with a positive 4.0%. So in this case, if both data are reported as positive, it's expected to be positive for the dollar. And of course, if they miss expectations, then it's expected to be negative for the dollar. So then later on at 4 p.m., we'll be getting data from China and the Eurozone. So one, the CB or the Conference Board leading index from China. So in this case, we don't expect much volatility. And of course, the Belgian NBB Business Climate Survey at 4 p.m. So that's it for Monday. We'll be getting more data coming in within the week. So for Tuesday, I think the most important data point will be the Bank of Japan core CPI year over year at 8 a.m. We know the amount of volatility we have seen as a result of the Bank of Japan hiking interest rates. And one of the key measures of inflation in Japan is the core CPI. So in this case, if there is a big change in the core CPI in Japan, then it might warrant a move by the central bank. That's why a lot of investors will be focusing on this. And that's tomorrow at 8 a.m. So the overall expectation is that inflation remained at 2.1%, and that's core inflation, which excludes food and energy prices. Then later on, we'll be looking at the housing market in the US at 4 p.m. So the S&P Case-Shiller Composite 20 Housing Price Index is expected to slightly increase to 6.9%. And of course, we'll be looking at the Conference Board Consumer Confidence Survey from the US, which is in expansion territory. So in this case, above 100. So we are looking at a slight slowdown to 100.2 from a previous reading of 100.3. And of course, the Richmond Manufacturing Index. So on Wednesday, this is where things will start getting interesting for the week. We'll be getting inflation data from Australia, year over year. So we're expecting a slight decrease to 3.4%, down from 3.8% as per the previous reading. And of course, the crude oil inventories in the afternoon, where in the previous reading we had negative 4.6 million barrels in stock. That was the week over week change. So on Thursday, we get German preliminary CPI, which is a measure of inflation in Germany. We're expecting that there was a 0.0% change in the previous month before we focus on the main data point, which will be the preliminary GDP quarter over quarter for the US, combined with the unemployment claims at 3:30 p.m. So fast forward, we will be getting the Tokyo core CPI at 2:30 a.m. on Friday, the unemployment rate in Japan, then retail sales for Australia, before we majorly focus on the most important data of the week, which will be the US core PCE price index. So still on Friday, we'll be having the CPI flash estimate for the Eurozone, where we are expecting inflation to have dropped to 2.2%. We'll be getting GDP data from Canada, but the most important news for the week will be the core PCE price index, which is the Fed's favorite measure of inflation in the US. So everyone will be looking forward to Friday's inflation report from the US, and this will be the major mover in the market. However, besides what we are seeing in the economic calendar, there is one more major news that we're expecting for the week, and this is a spotlight on Nvidia, which has become one of the top companies in the world as well as in the US. So it has been one of the leading stocks in terms of performance and allocation this year. And it's the same case that was last year and the previous year. So far this year, Nvidia is up a staggering 168.57%, eventually reaching a market cap of 3.18 trillion. So at some point, it had become one of the biggest stocks in the world, basically beating Apple and Microsoft. So if you look at, for instance, Microsoft Corporation, then you'll notice that the company has a market cap of 3.10 trillion, which means it's below Nvidia. And if you look at Apple, which is set to release its newest set of devices, that is iPhones, in September, then there will be a big focus. So Apple is up 22% year to date, and it has a market cap of 3.45 trillion, making it the biggest company in the world. So for the Microsoft year-to-date performance, the company is up 12%. So notice the differences. Apple up 22% right here with a market cap of 3.45 trillion. We have Microsoft, which is up 12.38%. Hopefully everyone can see this. And it has a market cap of 3.1 trillion. And now we have Nvidia, which is up 168.57% with a market capitalization of 3.18 trillion. So why is this happening? Why is Nvidia performing this well? So the main explanation for Nvidia is not just AI, it's reflected in the books of the company, which has been increasing its earnings at a staggering rate. So if you look at the trailing 12 months performance of the company's earnings, then you'll notice that the earnings were not doing all that well in the past couple of years. So just taking this back to 2010, the company was making 3.32 billion. So kept increasing, eventually got to around 6 billion. And since then, it has been a story of meteoric rise. And with the most recent performance, especially from 2022, company moved from around 29 billion, got to 44 billion, then 60 billion, and in the last year, it had 79 billion in earnings. So as for quarterly performance, you can see the story of the last 4 quarters. So from 7 billion, moving to 13, and then 18, then 22, then 26 billion. Then you can see it's a company that is growing exponentially, and that has been of key interest to a lot of investors. That has led to the big bet on Nvidia. So why am I talking about Nvidia today? So Nvidia will disclose its second quarter earnings results after Wednesday's market close. So remember, the US stock market closes at 11 p.m. Kenyan time. That is just 1 hour before midnight. So on Wednesday, after the market closes, that's when we will get the Nvidia's earnings. So Nvidia is one of the key market players, especially in the Nasdaq 100 index. So I'd like to show you something. So just a sec. So as we wait, I'll continue with this one. So the release of the chip makers' quarterly results has become a marquee event on the earnings calendar, and for good reason. Indeed, the company's jaw-dropping quarterly results in May 2023, where the chip maker forecast quarterly revenue 50% above what Wall Street analysts were calling for at the time, lit a fire under investors' appetites for all things artificial intelligence. So we know that Nvidia is a chip maker. It has the best chips in the world right now. It's ahead of other companies by at least 3 years, and their chips are in high demand, especially from the leading companies that are leading the AI revolution. So if there's a leading company looking to build the next generation AI, then they are definitely using the Nvidia microchips. So this time around, analysts expect Nvidia to report earnings of 57 cents per share. Note that this is considerably lower than its quarter one results due to 10-for-1 stock split. So this was implemented about 2 months ago. This was in June. So the street's forecast compares to the company's year ago post-split earnings of 25 cents per share. So when you adjust for 10-to-1 share split, the last report was 25 cents, and now we're expecting 57 cents. So earnings are expected to more than double in the last quarter. So revenue is expected to land at 25.6 billion, nearly double the 13.5 billion it's reported in the year ago period. So while Stifel analyst Ruben Roy is aware that there are concerns about near-term production targets for Nvidia's Blackwell chips. Blackwell chips are the most recently announced chips by Nvidia. He sees any potential delays to be in months versus quarters. He also says that recent checks indicate healthy demand. Consequently, we are again expecting a beat or a raise scenario for July results and October guidance. So we are not expecting any meaningful change in tone or messaging relative to what Nvidia has focused on since the company reported its fiscal first quarter results. That is, the company's longer-term roadmap and continued investment in organic and collaborative software earnings. So this will be a key focus for investors this week, and we don't expect it any other way. So jumping on to market screener, I just want to show you something here. And this is the weighting of the SP500, sorry, not SP500, but the Nasdaq index. So the Nasdaq index is a stock market index that tracks the performance of the 100 top tech companies in the US. So grouped together into one graphic, you can see the individual weights of each company in the Nasdaq 100 index. Of course, the company with the biggest weight is Apple, which has about what? I can't see the percentages, but from the size of the square here, it represents the weight of the stock in the index. So we have Apple, we have Nvidia, which was up 4.55% on Friday last week. We have Microsoft being key stock in the index. We have Amazon, we have Google, Meta or Facebook, and of course we have Broadcom as a key stock, as well as Tesla and Costco. So if Nvidia performs well, in the earnings this week on Wednesday after market close, then that could lead to a positive impact in the Nasdaq 100 index. So if you don't trade the stock, you might consider trading the index. And if you don't trade the index, you might consider trading the stock. They are both available on the trading platform. So that will be a key driver of the stock market. Remember, Nvidia is also part of the SP 500 index. So we will be watching that too. And hopefully, if there's a good earnings beat, this could drive market into a new all-time high. So that is something to keep on your watch, just in case Nvidia rumbles the market. If it misses earnings, it could lead to a big sell-off in US equities. So on the currencies front, we don't have much of a movement this morning. However, if you compare over the past 24 hours, and this is with extension to Friday last week, then you'd notice that the strongest currency as of this morning is the Japanese yen, which is up 0.33% against the dollar, whereas the weakest currency is the New Zealand dollar, which is down 0.31%, as well as the Australian dollar, which is down 0.23% against the US dollar. So main reason these two Asian currencies have been on the losing side is because there was some major changes in China this morning, where China decided to basically stimulate its economy and basically print more Chinese yuan. So one key highlight, the People's Bank of China launched CNY 300 billion via a one-year medium-term lending facility, MLF, to the financial institutions on August 26th. So in this case, by China injecting the economy with 300 billion Chinese yuan, that devalues its currency as well as the currency of the neighboring countries, the main key trading partners. So that may explain why we have a weak New Zealand dollar as well as Australian dollar this morning. So among other highlights, the dollar index hits a 13-month low, 100.5. So we know that there has been increased bets that the Fed will cut rates in September, and that has led to the sell-off in the dollar. And we could be seeing an extension of the same with a key decision set to happen on Friday after the PCE price index data. So Japanese shares fall as strong yen weighs. So having a very strong Japanese yen has the opposite effect on the Nikkei 225 index. So in this case, we have seen the index close down 0.66%. So Singapore factory output defies expectations. We are seeing a big boom in manufacturing in Singapore, up 1.8% year on year. So Turkish business mood dips to 20-month low, and of course, European stocks start week mixed. As we have seen, there is that summer bank holiday currently happening in the UK today. So oil rises on fears of wider Middle East conflict. I think this has been a key highlight for the weekend, where the war in the Middle East has accelerated over the weekend. So just to add more perspective to that, oil crimes amid fears of escalation in Mid-East tensions, countdown to US rate cuts. So oil prices extended gains on Monday on fears of a major spillover in fighting from the Gaza conflict into the Middle East could disrupt regional oil supplies, while approaching US interest rate cuts lifted global economic and fuel demand outlook. So in one of the biggest crashes in more than 10 months of border warfare, Hezbollah fired hundreds of rockets and drones into Israel on Sunday, as Israel's military said it struck Lebanon with around 100 jets to thwart a larger attack. So the crash raises fears of Gaza conflict risks, morphing into a regional conflagration that would draw in Hezbollah's backer, Iran, and Israel's main ally, the United States. So geopolitical risk factors will likely influence the oil market significantly. So this week, we could be seeing the new concerns leading to a premium on oil price. And since oil had already hit the lowest of the year, very close to the January's low prices, then we could be seeing a strong bounce, which could indicate major swing position, especially for Brent and WTI traders. So I believe those were the key highlights for the week. I don't know if there's anything else I'm missing. So with that in mind, I believe it's now reasonable to jump straight and check out the charts, do some technical analysis, and see the prevailing patterns in the markets. So good morning, Joseph Gisharu. I can see Jason in the house. Kibe, Haman, thank you for joining. Wangari Patrick, Liban, thank you guys for joining. So Jensen, there's a good point here. Jensen, one, this is the CEO of Nvidia, I'm assuming, has been selling his share of Nvidia. Can you talk about that in addition with delay transports of chips in China? So yes, there has been questions about the delays in the transportation of chips. But as we all know, a majority of chips that Nvidia uses come from TSMC, which is a company that is based in Taiwan, not China. But also, it's quite a common experience that once a share hits new all-time highs, you might see some of the insiders selling some of their stocks to cash in just in case the market takes a step backwards. So yes, the Nvidia stock has been performing really well. So a lot of investors will be looking on the forward to the earnings this week to decide whether to hit the panic button or not. So that's why it's a very important earnings release. So kindly don't share personal information on the live. So I would like to delete that comment. So if you want to reach me, kindly reach me at RufusKE on X. I'll respond to you directly. So which one would be better trading in the Nasdaq or the Nvidia stock once the company does its reporting on Wednesday? So if you want to have more diversification, then in that case, it makes more sense to trade the Nasdaq. If you want more concentration, it makes more sense to trade the Nvidia. So it's more like if you trade the Nvidia stock itself, if it has a major move, then you get more returns. And if you are wrong, you get more losses. But then in the case of trading the index, you're trading one stock in a basket of other stocks. So if there's a big move, then it could be weighed down by the other companies. So in that case, the risk is minimal. So the risk of Nvidia, let's say, collapsing a much bigger percent, let's say 10%, is not the same as the Nasdaq. The Nasdaq will not crash 10% because there are other companies that are performing really well. But then for the Nvidia stock itself, it might make a much bigger move. So it depends on whether you are pro or against volatility. So if you want an extreme move, probably trade the Nvidia stock. If you want a reasonable day trader move, then you might want to consider going for the Nasdaq. So morning, Oscar. Good morning. Account using the name Movies and Animations. Francis, good morning. So good comment from Malombe. Thank you, Riri, for everything. You have played a big role in my trading journey. Thank you. So let's get to the favorite part of the session. This is where we do some technical analysis. So I'll be launching my MetaTrader 5 trading platform for everyone to see, so we can do some analysis here. So as usual, I like starting the sessions with the dollar index. So clearly, we have seen the dollar index being pretty weak. For the past couple of weeks, I would say this is 8 weeks of bearish momentum, and now we are entering the 9th week. So last week's low was around 100.739, which was breached on Friday. So now we have a new low for the dollar index all the way down to 100.392. So the dollar index has been weakening because a lot of investors are expecting the Fed to cut interest rates on the September meeting. So they've been doing that ahead of time, which means that on the 18th of September, when the Fed eventually announces that it has gone ahead and cut interest rates, we will be expecting the exact opposite reaction in the market. So the Fed announcing that it's cutting interest rates and actually doing it might have the opposite impact, which basically implies that the dollar could strengthen on the 18th of September. So as of now, the dollar continues with a bearish momentum, which means that other currencies are taking advantage of this. So we have seen major swings happening, especially with the Euro USD, where it has reasonably regained momentum against the dollar, broken previous highs. You can see the highs that we had here on the 3rd of May. We had a high here. This was on the 28th of December 2023. So this was the 3rd of May 2023. And now the highest price of the euro as per last year was on 18th of July. So seeing the euro close above those highs, and now the next reasonable high is around 1.125, then we might expect to see the euro completing the journey and actually pushing for that. So last week, we had this expectation of the break and the market would pull back and continue. So this did not play out as expected. The pullback was much bigger than expected. So the market pulled all the way back down. So the idea was right, but the price expectation was wrong. So in this case, market pulled back and then made a rally here. And we could be seeing an extension of the same ahead in the week. But today being Monday and lacking major news in the economic calendar, we don't expect much of a volatility. So today remains one of those days. We don't expect much to be happening. It's more of a sideways momentum. I wouldn't expect anything beyond these two borders. So one is this high here, which marks a resistance that now could be turned as support. High of today and the high of Friday last week seems reasonable. So I expect the price action to remain within this area for the day. Maybe the market bouncing up and down until we have a key level break. So for the pound, it's the same thing. We have this public holiday, the summer bank holiday. So most UK banks are closed for today. So nothing much is happening here. So as for gold, I believe this is the most interesting chart of the day. We have just seen a burst of momentum this morning, right from around 8 a.m. With gold gaining about 0.6%. That is about 1,500 points or 150 pips. And now gold is so close. My price of gold is 25.31. No, that can't be it. Sorry. Yes, that's true. It's 25.31. That's the one we hit last week. And now gold is on the verge of hitting a new all-time high with this momentum. So this is it. And this morning, it's a quick grab. I expect the price to considerably rally from the current price level of 25.23 and eventually hit 25.31. So this is backed by a very weak dollar. So we are seeing a very weak dollar index. We have already seen that. So in this case, a strong rally to 25.31 is expected to be achieved within the day. So a very quick grab of pips. If you check from the current price level, this is about 0.32%, about 80 pips or 800 points. So it's the most interesting asset to be looking for to trade today. So Nikkei 225 index has really struggled to make new all-time highs. So from what we are seeing here, and I would like to just clean the chart so everyone can see. So this is what we have been observing here. So the market was literally following a trend line here, going this way. But now you can see the trend line weakening, the market taking this shape and eventually making that break. Sorry for that. So this is what we have here. So this morning, the market has broken the lower trend line. If you look at the upper trend line, it hasn't been strengthening per se. So if you look at the high on Friday versus high on Thursday, they were almost the same. And the overall prevailing trend line for the bullish momentum was following this path here. So we are seeing a market that was strongly bullish, slightly bullish, and now about to turn bearish. So for the Nikkei 225 index, despite the big stock market crash that was about 28% last month, we have seen the market recover over 50%. Then we have seen the daily candlesticks indicating a rejection of higher prices. And today it seems likely that we will be having our first close in 4 trading days, where the market closes lower. So from the 1 hour chart, this is how it looks like. So market opened strongly bearish, pulled back upwards, and now we could be seeing some further bearish momentum. So be on the lookout to watch for any potential evidence of sellers entering this market. It could have a nice break downwards. So looking at the UK 100 index, this is what we have on the daily. So I just want to shift this. So this is what we are seeing here. A market that has been on a very strong bullish trajectory. That's on the daily. So market has been oscillating here for the last 4 months. So right now we are approaching a critical area on the upper trend line. So if you go to the 4 hour chart, this is how it looks like. So the last 2 times we got to this trend line, there was a strong rejection. First time here, second time here. And now as we begin the week, the market is approaching the same area. So I'll be observing this area to see if there's a potential rejection and a consequent drop in the stock market index. So 83.63 seems like a reasonable price level to be watching for potential trade setup. So as for the USDN currency pair, which has been a major point of focus this year, we have seen the strong decline in the currency pair, where the yen has strengthened over 10%. So from the most recent high to the most recent drop, that was 12.52%, and the current price is 11.18%. So now you can see that the market is gunning for the low of the year here. So I believe this is the lowest price we have seen in the year. The last time we saw the price trading here was on the 2nd of January this year. So all the gains that the dollar had made over the yen have all been raised with the price action of last month and this month. And now the market is looking to reconfirm that bottom. So in this case, from the 4 hour chart, it's a very strong bearish momentum. From the 1 hour chart, it's a strong bearish momentum. So there was a clean break last week on the 1 hour chart. Market pulled back slightly. Notice the break, retest, and continuation today. So I expect some further downside momentum in USD and currency pair, with the overall expectation that the market eventually drops and gets to 141.71. So as for Brent oil, we are seeing a very strong bounce from the bottom. So this was the lowest price in the year. It was on the 3rd of January. This is when we saw Brent oil trading at $74.788. So since then, what we have seen is the market making a very strong bullish momentum for the first 3 months of the year and hitting a new high of $91.518 per barrel before we had 2 consecutive months of bearish momentum, 1 month bullish, and then the last 2 months, this was the month of July, and now August, we are seeing strong bearish momentum with very strong support around 74.788. And you can see that there are other times when the market bounced from this area. So given the price action of Thursday, Friday last week and today, you can see that it's a very strong bounce, and now it's headed to the next level. So we are already breaking the open of last week. Notice last week there was a big drop and bounce. So now we are starting with bullish momentum, and some key levels to consider might be the strongest resistance around this area here, which is 81.541. So if the market actually completes the pattern, then we will have a W-shaped pattern, which is a double bottom. So in this case, our neckline is currently at 81.541. So this is the pattern we are looking forward to. And as I mentioned, we could be looking at a major swing in Brent oil prices, where we could see a major rally extending from 78.883 to 81.541, especially given the geopolitical developments happening in the Middle East. So that being said, we have the Dow Jones, which was one of the most bullish stock market indices last week. So it already is testing a major high here, with the new all-time high being 41,377. So the stock market index has been struggling to break that area. So if I remove all these prior analysis, just clean up my chart, then you can see here that this was the previous high and the market is about to break it. So this week, we should be expecting a major push towards 41,377, which is just what? 0.4% rally from the current price level. So despite Powell's volatility last week, we saw the market jumping up and then down and then back up and closing on a high. So today, if we breach the day's high, then it becomes reasonable to expect the market to hit the new high. So this might be a good play. I know it's very short term intraday, but very interesting play. So you look at the SP 500, it's also very close to hitting a new all-time high. So from the H1 chart, we are just breaking Thursday and Friday's high. And now we could be seeing at the market just making one more push to 56.68 and hitting a new all-time high. And this is just 0.47% beneath the current price level. So you go to the Nasdaq, which has been the least bullish. So this one has really struggled to form a new all-time high. So from the daily time frame, this is how it looks like. So I would like to highlight the all-time high. So there's still more room to go for the Nasdaq. So from the current price level, it has to rally more than 5%. So this is 5.03%. But given the start of the week we have seen, it seems more likely that we'll be seeing an extended rally. So rather than focusing on a new all-time high, I would be focused on Thursday's high, which is 0.9% away. So a slow climb to that area might be in play today. Notice how the market opened, pulled back, continued, and it's still pushing higher. And now we are on the verge of getting to Friday's high. So expect a slow climb to this area here, 19,822, and perhaps some more momentum in the New York session towards 19,934. So that's it for the day. BTC USD made quite a good rally last week. So this is something we had projected would happen. Eventually, the market broke out and then made the rally. The top of the pattern was here, which was our target, 62,764. It exceeded expectations, so made an extended rally. Got to 64,991, formed a nice shooting star. So after the shooting star here, you can see that price is pulling back downwards. So now we should be looking for evidence of buyers coming in. I don't know whether it will be here or here or here. So we just remain patient and wait for the eventual evidence of buyers coming in to look for bullish positions over the week. As we have seen, even indices are also on a very strong bullish trajectory. So I hope I haven't missed anything. And that marks the end of today's session. Remember, we have a new episode of the Bullish Banter podcast. Very interesting episode. You might want to check it out on YouTube as well as your favorite podcast platforms. We also have a new episode of the Financially Incorrect podcast. I hope that you find some time and go through it on YouTube as well as other podcast platforms. So if you are very new to trading and you are looking to learn, make sure to check out the Novice to Pro series, which is available on FX Pesa YouTube channel. And at the same time, if you'd like to begin your trading journey today, download the Equity Trader app or just check the links in the description below. to find a link to register for a new account. So thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. So just one question I missed here. Again, Nvidia will be reporting after market close. Suppose it reports good earnings. Will the impact be instant right from the first session through the New York Open? Which is the best session to trade? So the thing is, when a company is reporting earnings after market close, well, retail traders, we don't have access to the market. Banks have access in what we call after hours trading as well as pre-market trading. So if Nvidia reports better than expected earnings, the banks will enjoy the big rally. And then when the market opens, it will be opening with a gap. So for instance, if it's better than expected earnings, we could be seeing, let's say, a 5% gap. So the following day, the market opens with a big gap up, and you don't have the opportunity to buy before before the market open. So what most traders do is that they will do their analysis, and if they think that the earnings will be better than expected, they will be buying before the market close. And when the market opens with a big gap, then they close their trades with a profit. And the opposite is also true. If your analysis indicates that the market will be going down, they will be shorting before the market closes. And when the market opens the following day, then they close their trades with profit. So it's unlike what we do with Forex. It's a little bit different, mainly because of that gap in pre-market and post-market trading. So thank you very much, guys. Thank you for your time. If you're watching this on YouTube, please like and subscribe to the channel. If you're watching this on X, feel free to share, like, and comment. And I appreciate every one of you for joining this session. So thank you very much, guys. See you then.